All right, mates, welcome back to the CryptoCast. Important Grayscale update just released late Friday afternoon, January 6th. Grayscale has sold its Avalanche component of its digital large cap fund. So, the digital large cap fund now held by Grayscale, one of the largest funds holding cryptocurrency, currently now is going to be holding Bitcoin, Ethereum, Cardano, Solana, and Matic. It will no longer holds any of the Avalanche project, and that's important. So when you look at 2023 shaking these things up, um, it rebalanced three of its funds that have different components: the Ethereum fund, digital large cap fund, um, and its DeFi fund. Okay, for 2023. Um, the digital large cap fund now comprises 65% of it is still in Bitcoin. Okay, 30%, a little over 30% is in Ethereum. About 2% of it is in Cardano. A little over 1%, about 1.3% is held in Solana, and about 1% is held in Matic. So those are your major projects in their digital large cap fund. Obviously, those cryptocurrencies are trading in the top 50 of the market cap cryptos. Now, in its ex Ethereum fund, it removed Algorand from its list of assets in quarter four of 2022. Um, as well as Polkadot and Cosmos. That's kind of interesting because Cosmos, actually, Atom, actually has a lot of potential going into 2023, 2024. Really like that project because of its capabilities of kind of bringing different blockchains together. So that is interesting if that's exactly the case. If they remove them altogether or they just have downsized that. The DeFi fund announced that it will was announced only have 6 assets following the removal of synthetics from its fund. That is an old line, old school crypto DeFi. It's been around forever, but it's just in the last few years have just gotten pummeled by the market. And it's kind of interesting to see here. Let's see what we have the total. See if there's any other. Maybe they didn't move Polkadot, all of Polkadot and Cosmos from the Ethereum fund. That's kind of interesting. But they did remove Avalanche from its digital large cap fund. They removed Algorand and Synthetics from the DeFi fund. So they did not remove Polkadot and Cosmos, which doesn't surprise me now. I mean, because I think those two pretty much still have incredible potential coming out in the next bull run. So those are definitely two that you want to look at. The other interesting component of all this is the Ethereum trust. Grayscale's Ethereum trust is now at an all-time high in terms of the discount for Ethereum, which means it's a 59% discount for Ethereum. Now, you want to make sure that you are aware of, if you've watched any of the videos that I've been doing, kind of setting some things up for 2023 for leverage traders. But you certainly could do this if you're trading on spot, is be aware of the Shanghai hard fork coming in March 2022 for Ethereum, okay? That is going to unlock a lot of the staked Ethereum tokens. And the impact, we are not aware, really, of the actual impact that's going to have. So you want to be watching a lot of your metrics during that time frame. Your exchange flows. A lot of people are going to move Ethereum to exchanges to sell before that, in anticipation of potentially people that have staked their tokens selling in the aftermath of the hard fork. So some people may want to get ahead of that, sell, and then buy back after a potential supply squeeze. Okay, so you want to pay attention to that. And the way you do that is you watch the exchange flows. And if you see an overabundance of Ethereum tokens spiking, being moved to exchanges, that signals an intentionality that those folks are most likely moving to the exchange to sell. Remember, we don't like to hold crypto on exchanges, right? So if they're moving tokens to the exchange, they intend to sell it, mates. Okay, so you want to be very, very cautious with that. All right. The second thing that's aware on the horizon I've covered is the Litecoin halving. What impact will that have? Will that have any impact on the overall trajectory of the market in 2023? Will it bail out some of the other highly correlated assets to Bitcoin? Because this is now Litecoin's third halving. And we've seen what has happened the prior two halving events for Litecoin. They're very similar to the halving events for Bitcoin. Okay? Right now, Litecoin's been trading in the 70 range for quite some time. And so we've also seen larger whale and shark purchases of Litecoin on every single dip, which is a signal that they're going to accumulate those tokens, expecting the halving event to then have and then usher in another pump or bull push for Litecoin against Bitcoin. Very, very similar, okay, to the Bitcoin halvings. Okay, if you go back and you look at how the behavior has been. So all these things are easily found on your metrics, okay, when you're looking at your in and out of the money flows, you look for the support and resistance bubbles, and when you get to those liquidity pools, that's when you want to make your decisions if you're going to buy on spot. Remember, I've always said this to everybody, is if you're going to be a spot trader in crypto, you never buy when the RSI is above 70, okay? You never buy there. That's an overbought condition. You wait for it to fall back down below 30, below 25 and 30 on your RSI. That could be a daily, it could be a 4-hour, is your prime area of when you want to accumulate a token on spot. Okay, don't chase at those high elevated relative strength numbers. Inevitably, you're going to get squeezed and you're going to get burned. Okay, but if you're going to trade the spot portfolio, like you'll be able to look at the CryptoCast spot portfolios next week. So make sure that you sign up for that to be able to get access to that. You can see all the cryptos for 2023 and the different portfolios and what allocations and what exposure there is and project and all those for those altcoins. It's going to give you a good indication of when we add to those portfolios, right? We don't add at RSIs above 70, right? We add to those portfolio bags when the market is down and it takes all of crypto down. Has nothing to do with the individual projects, okay? And their RSI falls below 30, then we add more to the portfolio, okay? And that's how you really want to do it. And then again, you also can use that on the flip side, depending on how long you want to hold your portfolio of assets for, just like Grayscale does. You've seen what Grayscale has done over the years, okay? It's decisions really based on project potential and the market in terms of acceptance, right? And so while the rest of the market seems to want to be rejecting Solana, for example, with all this negative news, which is mostly coming from social media, people like BitBoy Crypto, Ben Armstrong, and his followers and other crypto influencers that are kind of a circle. They all say the same things at the same time. It's kind of like, it's kind of like a herd of the same messaging. It does things and brings the market down. And you've got someone like Grayscale or like MicroStrategy or like Polychain Capital or like all these big money, institutional money. They're ignoring all that noise, and you should too, okay? Because they're accumulating Solana on the cheap. They were accumulating Solana at $9, at $8, okay? All right? There's a reason for that, all right? Because, again, Solana is a developing project. Like all the projects have had issues, okay? But its FTX Solana's not linked to FTX, okay? Like FTX bought Solana tokens, $50 million, okay? and Alameda bought 7 million of Solana they're locked up and was with the FTT, and they're locked up. Okay, so it's like you're punishing the developer for someone who invested in them, right? Okay, there is issues to look at, concern about what happens to the tokens, what happens to all that stuff. I completely understand that, but that has nothing to do with developers and the development of any blockchain. Doesn't matter whether it's Matic, doesn't matter whether it's Cardano, doesn't matter whether it's Solana. Okay, their developer project is still intact and they're still working. 2,000 developers work on the Solana blockchain project. Okay, all the other stuff is just noise. Okay, Matic went through this, Polygon, they went through this too a year ago. Okay, with people just kind of like, and then suddenly now you're watching them rise to levels of having the most transactional activity on a daily and monthly basis, over time, leading the pack, ahead of Binance Smart Chain and ahead of Ethereum and ahead of Solana, right? We had Solana back in Q2 blowing the doors off of everybody, and everybody wants to sit back and say, oh, that was just Sam Bankman-Fried and that was just all that. No, it wasn't. Sam Bankman-Fried got those tokens in 2020 and 2021, okay, not 2022. Okay, so that has nothing to do with the activity on the Solana blockchain in Q2 of 2022. That was the NFT, okay, pump and bull cycle, okay, where it was crazy with the NFTs, okay, and now we're not. Now we're seeing that the NFT transactional activity is actually at its low. Okay, so you're not getting the same amount of volume and transactional activity happening on certain blockchains that have a heavy NFT focus to them. Okay, and so that's what you want to look at when you look at these on-chain metrics. Okay, but also pay attention to Grayscale and where's the institutional money going. It is a big deal that they dropped the Avalanche because that signals something. They may know something that the market and the influencers don't really know. Avalanche was a big project with Solana, okay, in late 2021 and 22, okay? So it's interesting to see. DeFi is another example of we really don't know who the winner is going to be. We don't know if it's going to be Aave or Compound or Synthetics rebounds, right? We don't know YFI, right? We don't really know because DeFi has been beaten up so much that we really don't know who the winner of that is because of that regulation, okay, worry of lending platforms and staking platforms and all of that just getting hammered with regulation. So it's interesting to see them rebalance that DeFi fund as well, because they are. DeFi is some of the most undervalued right now cryptocurrencies there are, but it also comes with a lot higher and greater risk than, say, investing in a layer or a blockchain crypto, okay? Because we can gauge that blockchain through its transactional activity, its growth rate, right? It's harder to gain really the DeFi, some of these DeFi startups and some of these DeFi projects in reality. We know we get told things, but, if people can't get their money off these platforms, if these platforms continue to lock up Genesis, Voyager, all of these things keep happening, BlockFi, all this stuff keeps happening, then DeFi's in trouble. And that's why a lot of people aren't really interested in putting money in that, including Grayscale. They have not put excessive amounts of new money into their DeFi fund like they have in Ethereum, in Bitcoin, in Matic, in Cardano, okay, and Solana. They just haven't. If you look at like the breakdown of the funds, so that tells you a little bit of who's going to be the first crypto projects to come out of this bear market. And it's going to be those. It's going to be those macro caps. It's not going to be the micros. It's not going to be the new projects. They're going to come in with a tailwind, okay, after the macro cryptos in the top 25 move this market as we move through the bear market and come back into the next bull cycle. All right, mates.